stock market highlights last year was, of course, the record amount of capital raised from public offerings, which includes funds generated by 8 companies from their respective initial public offerings. Now, with more IPOs expected this year, how can investors evaluate and determine which companies are worth investing in? Now, here to talk about investing in IPOs is Pam Victoriano, first Vice President of Unicapital Incorporated. Now, Pam has been involved in a broad range of private and public equity transactions, financial advisory, as well as mergers and acquisitions for several years now. Hello, Pam. Welcome. Very busy days ahead of you.
Hi, Danny. Yes, thank you very much, and good morning to everyone who's joining us for today's PSE Investment Expo.
Pam, the big question here is, as exciting as a new offering could be, there's so many options out there. And how do we make, informed decisions? Do we just jump on the bandwagon? Do we just follow the trends? Or are there more fundamental issues that we need to be understanding? So for sure, the next 30 minutes will be very, very educational to our audience. Over to you, Pam.
Thank you so much, Danny. And yes, I hope to be able to share a little bit of information or some tips and tricks to help our investing public as they navigate the IPO market of the Philippines. Okay, let me just share my screen. All right. So for this morning, just a quick introduction. So I'm Pam Victoriano from Unicapital. We're a local investment house. So we actually help in bringing companies public to the market. So I hope to be able to share some information with our guests today with regards to how the IPO market has been doing, and a little bit of some of the basics. What is an IPO? How do I look at this? How do I even get the information and be able to assess whether this particular IPO would be a good fit for me as an investor or not? And then before we end the session, I'll just share some of the tips that our brokers had shared with regards to taking profits and cutting losses. As much as we know that IPOs are long-term investments, sometimes we also need to manage that, given that the markets are always volatile, and we need to see how, and we need to be able to respond to how the markets develop. So just a very quick recap. So as Danny had mentioned, 2021 was a banner year for IPOs in the Philippines. We had, for the first time, 8 IPOs, 4 of the more traditional common share IPO offerings, and 4 REIT IPOs, for a total of about 117.3 billion in total funds raised just in 2021 alone. And now one of these IPOs was actually the biggest ever in the Philippines, and I think the biggest food and beverage in Southeast Asia, and that's Monde, Nissin, Corp. So let's take a look at what we have in store. Now in 2022, we've already had 2 IPOs actually, as early as the first month of the year. We've had the IPO of House Stock Inc. We've also had the IPO of the Figaro Coffee Group. We're very familiar with their coffee as well as Angel's Pizza. And then moving forward, based on public data, so what's available on the news as well as the posted prospectuses, it looks like we may still have a couple of more names to expect within this quarter, namely the Citicorp Energy REIT Corp IPO, Bank of Commerce IPO, CTS Global Equity IPO, Valeni Frutas Inc., and Raslab Corp. I understand, I think one of our other speakers as part of the expo will also be talking more about the market and the upcoming opportunities. So we're not going to spend too much time on this one today. So for those of you who are fairly new to the stock market, I guess you might be asking, what exactly is an IPO? So an IPO is an initial public offering, essentially the first time that the shares of stock of a corporation are offered to the public for investment. Why do companies choose to do this? Primarily to raise funds, usually for growth capital or for some other purposes, such as, let's say, debt repayment, or let's say, for example, to provide an opportunity for early investors to be able to partially liquidate on their investment in the firm. It also allows companies to have greater access to capital, as they are now able to tap the capital markets for their requirements, and gives them improved liquidity because there's active trading on the shares of the company. It also brings them to into public profile, since as part of the disclosures, there are regular updates that are provided, and investors or the investing public get to be familiar with these companies. So just here we have a rough timeline of some of very familiar names who have gone to list as early as 1982 for the group of Philinvest Development Corporation. And more recently, as mentioned in 2021, we had Monde Nissin as well as the Robinson's Land Commercial REIT. So this is a topic I've seen a lot, and some people would typically ask me, are IPOs always a good investment? So I've seen some people comment and say, if it's an IPO, that's for sure good value, good buy, we should buy it. But is that actually the case? So if we take a look at the 2021 IPOs that we've had 8 IPOs for that year. And out of those 8, 5 of those IPOs, if you can see here in the bottom, we listed what was the market capitalization of these IPOs upon listing versus at what price or what market cap the equity of these companies are currently trading at. So what we've seen is actually out of the 8 IPOs we had in 2021, 5 of those are currently trading above what they listed on for their IPO. So they've generally gotten a bit of a price appreciation. But that's not always the case. We've also had some IPOs who didn't perform as well or who are currently trading at below IPO. So what could possibly be the factors that would lead into that? So in the case of Monde Nissin, Monde Nissin is the biggest IPO we've had in the PSE. Very well known here in the Philippines for, of course, the Lucky Me noodles that we have. And since its IPO, Monde Nissin stock has risen by about 23.3% on the strength of stable growth in net income, despite pandemic headwinds. I guess as Filipinos, we eat a lot of instant noodles. And in this pandemic, that has helped Monde Nissin as well. We've also seen the listing of RL Commercial REIT. This is the REIT portfolio of the Robinson's Land Commercial Group. And this was actually the second biggest IPO we've had in 2021. And with its float of about 37%, the stock price has actually risen by 31.8% as market interest increased and there was improving conditions for the local real estate market. I think earlier we heard how the market has the COVID situation has generally improved a little bit. We've seen more people go back to work, and this has in turn benefited some of the office and property sector stocks. Medilines Distributors. So we took a look at 2 of the biggest IPOs we've seen in 2021. Now let's take a look at some of those companies on the smaller end of the scale. We've also seen the IPO of Medilines Distributor Inc. Unfortunately, the price has gone down since IPO, and generally the sentiment is because of subdued investor interest and some analysts attributing this to the price having been overvalued at the time of its IPO. We'll go into that as we go along in the presentation, whether or not price is always the same as value. And of course, before we ended the year, we had the IPO as well of Solar Philippines, Nueva Ecija Corp, who on the flip side was also a small IPO, but has enjoyed good performance in the stock market, and whose stock price has more or less has since then more than doubled to about 2.17 on the back of the aggressive expansion plan and the recent news of additional infusions, which are expected to or are in the works for the company. So our IPO is always a good investment. As you may have seen just from the 8 IPOs that we've had last year, not always the case. So there's the good part about IPOs is that there's always a potential for huge gains, given that you're coming in early before a price has been set by the market. So you could have, let's say, for example, if you look at the stock of Jollibee, if you had bought into it or San Miguel from 10, 15, or 20 years ago, the value of those shares of stock from then until now would have had appreciated significantly. So there's that opportunity. It also does come hand in hand with the time that you have. On the flips, their pricing, sometimes for IPOs, the IPO could also be priced at a discount to its intrinsic value to help attract more investors into the IPO. So if you get that opportunity, then it becomes a very interesting investment opportunity, because even if perhaps maybe it doesn't do so well in the first couple of days, but you know that in the long run, this IPO would be a good investment or a good part of your investing portfolio. So when is it that an IPO is not a good investment? So sometimes the growth is already priced in. Of course, from the company standpoint, they want to raise as much value as they can for their company, which sometimes means that even the growth prospects for let's say the next 1 or 2 years is actually already captured into the IPO price. So is that bad? Not necessarily, because you kind of if you believe in the fundamentals of the company, then you kind of expect that that growth is going to continue for more than just the next 2 years. So later on down the road, it's still going to be a good, potentially good investment. It's just a question as well of what your time horizon is and your risk appetite is as an investor. And then lastly, and please caution our investors about this, sometimes the performance is driven by hype rather than fundamentals. So while there are two schools of thought in the stock market, fundamentalists as well as technicals, it's always good to have a bit of a balance of both. So at least aside from just buying on the technicals or the volume trading, at least we have a sense of why is it that we want to invest in this particular IPO. So number one, please do not invest in hype. Conduct your own research and read the prospectus, which is the marketing document that has been approved by regulators that captures the information about an IPO. So how do I go about identifying which particular IPO to invest in? Let's say, oh, okay, after Christmas, I have 13th or 14th, or I have bonuses that I could potentially invest in the stock market. Now, how do I choose, or how do I know when an IPO is coming up? So you have two main sources of information. First and foremost, we have the PSE Edge, which is the PSE's automated system for distributing company disclosure reports, not just for already listed companies, but also for listing applicants whose applications for listing or an IPO had already been approved by the PSE. So this is your first go-to. News will always break out first on the PSE Edge. So this is a good source of information, and this is information that has been validated and reviewed by the regulators as well. And whenever there is a public offering, whether that's an IPO, a follow-on offer, or stock rights offering, a prospectus, which is a formal document providing details about the investment offering, is required to be prepared by the regulators. So once this prospectus is approved by the SEC and the PSE, it should contain, as required under the rules, the necessary disclosures from the company and the underwriters to allow an investor to be able to really assess the company and understand what it is that they're buying into or what it is that they're investing into. Of course, in this day and age where technology is very prevalent, there are other supplemental information sources that you could also take a look at, but should not be taken over the prospectus as well as the PSE Edge. So sometimes your broker would have a research department who prepares a research report on listed companies as well as upcoming IPOs. Now, the good thing about this is it's fairly short compared to the 200 to 1,000 page prospectus. This is typically maybe anywhere from 3 to 15 pages long and gives you a quick overview about the business. It may also provide the views about the research team of the brokerage on what they think about the company and the price and its prospects. And then lastly, news and social media. You should not rely on news and social media to make your investing decision, but it is good for being able to keep tabs on what are the upcoming offers or what are the developments in the market, or perhaps if there are trusted industry practitioners that you like to listen to, it's sometimes good to hear the views of other people as well, which may be the same or different from what you think about an IPO. Ultimately, however, as an investor, it's important that we all make an informed decision about what we're getting into and what stock we're buying. So I don't think that in the next 20 minutes, we can all become Warren Buffetts, and I don't believe that that's our intention for this segment of the expo. But what I hope to provide is to give you a bit of a framework similar to what we would look like from a corporate standpoint in assessing or looking at the company and whether or not we would want to subscribe or invest in their particular IPO. So generally, we would want to take a look at the offer structure. What is being offered by the company on the table? And coming from that offer structure, what are they doing the IPO for? How much are they raising? What are they going to invest this in? Because that will help shape or that will help support the growth plans of the business. Of course, we can't get around talking about the business itself. Why would you want to invest in this company? Who is this company? And in the context of its industry, how is industry growth? Is it one of the leaders? Is it a laggard? What are the prospects within its industry or space? Of course, we can't walk away from management and shareholders. Ultimately, it's the management and shareholders who deliver on the business plans of the company. So sometimes for us, it's also a critical factor who's essentially driving the wheel behind this business. And all of that, we believe, is reflected in financial performance, both the historical financial performance and an investor's estimate or expectation of what could potentially be the financial performance of this company moving forward. But of course, in the end of the day, I might say, I like this IPO, but is this a good price for me to buy in? So pricing and valuation should always be a consideration when we're assessing a potential IPO investment. So earlier, I talked about the main selling document for an IPO, which is the prospectus. It's a 200 to up to 1,000 page document. So how do you go through it? And what sections should you, if you don't have the time to read through all pages, what are the key sections that you should focus on? So these are generally the summary of the offer, the business overview, the use of proceeds, shareholders and management, industry overview, and financial highlights. If you notice, these are actually some of the core information that I mentioned earlier, investors would typically want to pay attention to when they're assessing or identifying an IPO that they would choose to invest in. I'll just walk you very briefly. The intention here is just to familiarize you with some of the parts and what information you may see in the prospectus. So there is typically a summary of the offer terms, and this hopes to capture just the key points of what exactly is being offered to the investing public. So here you would typically see the name of the issuer company. If there are any selling shareholders, then you would also see them disclosed at this point. The syndicate of underwriters would also be disclosed. The underwriter serves as the intermediary between the issuer and the investors. And then they also provide the underwriting commitment as soon as the price has been set until listing date. One of the things you would probably see on the summary offer as well are the offer terms. If you see the term primary shares, this refers to newly issued shares of common stock, meaning the funds that are raised from the primary shares go to the company. On the other hand, if you see secondary shares, this is in reference to shares which are currently held or owned by existing shareholders. So that means to say any proceeds from the sale of the secondary shares would be going into the hands of the selling shareholders. Another important information that you can get in the summary offer is the plan of distribution. It tells you how much of the offer is being placed with institutional investors. So this is typically about 70%. This section will also let you know if the offer is being offered as well to offshore investors or solely in the Philippines. This section will also provide information on how many shares are available for the trading participants and the local small investors. So perhaps I'm not an institutional investor. So how do I get into this IPO? So part of the program of the PSE is actually to provide local small investors with an opportunity to participate in all of our IPO. And this is done through PSE Easy. So should you wish to subscribe through that, you could actually see this information on how many shares you can as a minimum subscribe to or as a maximum subscribe to in this particular section of the prospectus. You will also see references to the offer price. So whenever you might have seen my table earlier and you might hear us talking about market capitalization, which is essentially the price of the shares multiplied by how many shares are outstanding after the offer. So it's important, especially if there's a primary share component, to make sure that when you're trying to determine what the market cap is for the issue, to pay attention to how many shares total there will be outstanding after the offer. There would also be times when an IPO has an over allotment option. This is not always featured, but some IPOs would provide this. So the over allotment option essentially means this is an option that is being given to underwriters to allow them to sell additional shares of the IPO in support of price stabilization activities. So this may, or as an option, this may or may not be executed. So there's no guarantee that just because there's an option, it would actually be executed at the end of the offer. Investors can also see in the summary of the offer terms the process for subscription. So what do I need to prepare? Am I allowed to subscribe? I'm a foreigner, or I'm a foreigner, but I'm a resident in the Philippines. What do I need to be able to subscribe? or I might be part of a company. So how does my company invest? So these information on what is needed and what's the procedure for applying for the offer is also captured in the summary of the offer terms. Another key set of information is the expected timetable. So this gives you a sense of when possibly the approvals, the offer period, and the listing date for an IPO is being contemplated at. Another section in the prospectus that we would usually pay attention to from an investment house standpoint is the use of proceeds section, because this tells us, okay, you're raising 46.3 billion pesos. Where do you intend to spend it? And how does that align with the growth plans of the company and its current financial performance? So as an investor, this allows me to understand not just how much money the company is raising, but to what those proceeds will be applied to. Of course, very important, the business overview. This allows us to understand who the company is, what's their history, what's their track record. It's important for us to know what exactly are we investing in, what's their business model. Do they have a competitive advantage? Do they have what are the strengths that this company is able to offer as against other companies? Why is it a compelling investment proposition? It also talks a little bit about the future plans and strategies of the business. So it's a short summary section that captures or gives us a sense of what could be the potential direction of this business moving forward. Will they continue to expand their number of stores? Are they going to go outside of the Philippines and expand into other markets? Will they acquire new companies in other segments? So this is where that information is captured. Another important consideration when you're looking at the business section of the prospectus, the risk factors. While the risk factors are not exhaustive and are not always comprehensive, it gives investors a sense of what the company as well as its underwriters perceive to be the risks in the business. So this might be risks associated to the company, the business or industry it's in, or even as to the offering. So it's good for us to have an understanding of, I'm getting into this. What risks are my potentially facing for putting in an investment in this company? Earlier, I talked about the importance of knowing who's driving essentially the company, right? And that's essentially captured in the section on board of directors and senior management. So it gives us a very quick overview about who these people are and what their backgrounds are. So it gives investors a sense of what can be expected from the senior management and board of directors. The shareholders and the shareholding structure is also captured in the prospectus. So from here we see, so for example, this is taken from the Monde Nissin. I'm not affiliated with Monde Nissin, nor was I a part of the offer. So this is from an independent third-party perspective. So if I look at this, I understand, okay, who are the main shareholders? Is there a risk of somebody selling a chunk? Can I expect that these shareholders will likely hold their position in the company? So it gives us a better appreciation of who are the people behind this business. Of course, since we're talking about investments and numbers, all of this, the business plans, the competitive advantages, these should all reflect in the financial performance of the company. And in the prospectus, we're actually required to disclose the income statement, balance sheet, the statement of cash flows, and a short explanation about exactly what happened in each of these years, so that a prospective investor can have an appreciation of how the business is doing and what could be the possible trends that we can observe in its financial statements. So these are just snippets that have been taken. So this is previously we have the income statement, we have the summary of the balance sheet, as well as the cash flow statement also there as part of the summary section. So it gives us, again, a very quick view on how, whether or not the business plans, the story and strategies of the company have translated into financial performance. And that's going to be important for us later on when we take a look at the price or the valuation of the stock. Although a lot of people will probably say the industry section is just fluff, actually it's very important as well, because the industry essentially sets the stage for the business to be able to compete in. So this would allow us to appreciate what are the trends affecting the sector. What would be the potential opportunities and risks that the company might face from an industry standpoint? From a growth perspective, is the company growing faster or slower than the industry? And could that mean a potential upside later on if the company gets to catch up? So these are information that you can get from the industry overview section. So for all of those information, we can find that in the prospectus, which is why for anybody who's thinking of investing in an IPO, please do make sure to check out the prospectus. As soon as the preliminary and final prospectus is approved, this is uploaded on the website of the PSE. So that should give you an easy sense or link to be able to get hold of the prospectus of these companies. But of course, okay, let's say, for example, we've taken a look. I like the business model. Industry prospects look good. I'm impressed with the senior management, as well as the financial performance. Very great, very good performance that the company is showing. So now then the next question is, so I like this business, but at what price should I actually buy? Or is the IPO price potentially good? Or is that something I want to invest in? So in valuation, there are many different approaches. So valuation, the idea behind valuation is to arrive at a fair value of the company, of an asset, or of a liability. And there are many different approaches, which should be applied depending on the type of business or business model the company has. So let's say, for example, if I'm a property developer, if I'm a big property developer like Ayala Land, let's say, so land banking is critical for my future growth prospects. So perhaps I might, aside from the current financial performance, I might want to take a look at, okay, how much land banking does this company have moving forward? And how does the price equate to that land bank value, which is typically translated as price to NAV? We could also be looking at discounted cash flow. If the business model is a recurring cash flow model, fairly stable, but then returns are generated, let's say, over a 10, 15-year period, it's unfair to value them just on a one-year perspective alone. So I may want to look at cash flows as that perspective. And of course, the most common one, we have the market multiples or relative valuation. So this is referred to when we hear about price to earnings ratio, EV/EBITDA ratio, price to book ratio. These are all market-based ratios. So earlier when we were taking a look at so before you jump into actually applying the ratios to the performance of the company, so earlier from the prospectus, we get an appreciation, right, about the business. What's the nature of the products? How do they distribute? What's their geographic reach and business life cycle? How are they positioned within their industry? And then on the financial side, are there any necessary adjustments? Were there any one-off items? So they had a huge profit, but it was from the sale of a business segment or division. So you cannot expect that same profits will be generated in normal course of business. You also have, what are the trends? Are revenues growing? Is profit increasing or decreasing? Are margins improving? Is the company highly leveraged or debt-free? So these are information that you would have gotten from looking at the summary financial information in the prospectus. And if you take a look at that and look at compare it to the peers, it allows you to better appreciate, is this company doing as well or better or not as well as its peer group, so that you can have a sense of what would be the opportunities for this company. And earlier I talked about industry and market factors. So what are the factors driving success? How big of an industry and market is it? If the industry is as big as 100 billion, and you're estimating that you're going to get, let's say, 50 billion, so you're roughly 50% of that industry or market, does that make sense? And is that achievable given the company's plans? How quickly is the industry growing? During the pandemic, we've seen high adoption of technology-related services. So let's say, for example, digital payments, online transactions. So these growth rates help shape the growth and the value of the equity as well as the business. How competitive is it within the industry and market? So once we have good understanding all of that from the prospectus, then we can come up with our own estimates. So what do we think? Based on the plans, perhaps they can grow their business by maybe 5-10% for next year. Would there be any potential improvements in the margins? Are there any adjustments because there were one-off transactions I need to make? So you arrive at the sense of like, okay, what's an expectation? How much can this business generate in the next 1, 2, 3, 5, 10 years? So after that, you want to, of course, the markets, the companies are not standalone. There are always other options in the market, right? And one way, the relative valuation or market multiples approach is really to take a look at that company and the context of its peers. Especially in the pandemic, when we saw a lot of companies' prices go down. So in that particular situation, it may present us with an opportunity where existing listed companies could potentially be trading at a better value than the price at which the company is being offered. So this is outdated data. We ran these numbers in 2021, I think early 2021. So these were forecasts. So please do not rely on this information that's on the screen. But what I just wanted to show you was, let's say, for example, what do I mean by comparing the company's pricing or valuation compared to its peers? So let's say, for example, at some point in 2021, PLDT was trading at about 11 times 1-year forward earnings and about 5.33 times EV/EBITDA. In comparison, its peers at the time, Globe, China Telecom, and Converge, China Telecom was cheaper, while Globe was a little bit more expensive, and Converge is at the upper end of the range for its peer group. So I guess what I'm trying to say is it's also important to assess, okay, this is the price. Now, is that a good price? Of course, we want to relate it to what's the potential valuation of that company at that price. And if I take a look at other options in the stock market, am I happy with this particular price being offered by the company, or do I have better options out there? A recent asset class that has been launched are the REITs. So one of the approaches, one of the considerations that investors would sometimes look at is what would be my expected dividend yield? Because REITs are expected to pay out regular dividends to its shareholders and investors. So for example, since the launch of the REIT class in 2020, we've seen REITs IPO at the price equivalent to a dividend yield ranging from 4.85 to about 6.6% in the case of Philinvest. So from an investor standpoint, I might say, how much is my money making in the bank today? Or how much am I making off of this bond? So given the risks entailed in the description of the business at this particular dividend yield, could these be potentially attractive asset classes for me to invest in? So it's important to always take a look at what's out there in the market. So to give you a sense of, is this company at this price a good buy or a potentially good deal for me? So going back to that question, is this a good price to buy? One thing of note, price is not always equal to value. Because you might say, Pam, there's this company, the valuation multiples are really good, but look at the price, it's depressed. Can that happen? Yes. Because as much as we expect markets to be rational, price is not always equal to value and vice versa. Drivers of value are cash flows and earnings being generated from existing assets and or assets that we expect to be acquired coming from, let's say, the use of proceeds. The quality, the growth prospects of the company and the quality of growth are also a key consideration. As to price, on the other hand, what typically drives is supply and demand. The market is driven, it's a market. So typical with any marketplace, there will be buyers and there will be sellers. Various buyers will have different risk appetites. There are different prices at which they're comfortable to buy. And the seller, of course, would want to get the best prices possible. So there's always supply and demand mechanics operating within the market that we need to pay attention to. There's also the market moods and momentum. And we've seen that last year. We had very good momentum in our IPOs. The market was trading very well. But then with the surge of the Omicron variant and its arrival in the Philippines, we saw how that had impacted the market and caused some jitters for investors, caused more uncertainty. So those are market moods and momentum, which may affect the price of a stock or of an IPO. There's also surface stories about fundamentals. So earlier I talked about how the story plus the numbers should always go together. The numbers must support the story, and the story should be tied with the numbers that the company is presenting. But sometimes there's just surface stories about fundamentals. I'd say we are not able to deep dive into them yet because they're maybe too far into the future, or we don't have an appreciation of how these trends might potentially impact the business. So let's say, for example, what we saw in 2020, right after the lockdown. So we saw the rising cases of corona globally, and there was the long lockdown announced in the Philippines. And immediately when the markets opened, we saw the markets drop significantly at the time. We would not have a sense of how exactly or how far-reaching the impact of the coronavirus would have been at the time. But the markets, of course, will react and will price this in. So we saw that in the dip in the market. And that's why if you look at the average price to earnings ratio at which the PSE index was trading at the time, In 2019, it was at the low compared to the previous years. It was about 16.9 times. So now, after having an appreciation about the business, so now that I have a better understanding, okay, I know what the business is, I'm comfortable with what's being presented, I want to invest in this business. And I've taken a look at the price, and I've taken a look at other offerings out there, whether they're listed companies or upcoming offerings. And I'm pretty happy with the price that's being offered by the business. So would I want to invest? Then I would imagine that the answer might be yes. So typically on our side, what we look at, we want to look at companies with a strong business model with a competitive advantage, a solid growth strategy and prospects, management team to deliver in the business plans. Of course, this should all translate into the robust financial performance. And ultimately, at the end of the day, am I getting a good price at this offering? So let's say, for example, as much as the IPOs are targeted to be a long-term investment, I've spoken to some of our brokers at the office and tried to summarize what are their tips on how do I minimize my losses, or what could be guide points when trading on the stock market. So first and foremost, whenever you talk about taking profits and cutting losses, we need to develop an understanding of what exactly is your risk profile. So the risk profile of somebody who, let's say, might be in their early 20s and is looking to invest in the next 20 to 30 years might be different from somebody who is in their 50s or 60s, whose priority would be, I may want to secure my retirement plan, but at the same time, I have a lot of funds that I can invest. So you have to take a look at what's your risk profile, what's your risk appetite. So for example, your age, are you looking to flip this, or is your investment horizon, I want to be able to get in and get out of this in the next 1 to 2 weeks, 3 months? No, this is a long-term investment for me. So those are considerations when one choosing to invest in what IPO, and at the same time determining where are you willing to cut your losses. And always remember, there's always high risk and low risk investments. And generally in finance, we would say that there's high risk, high reward investments. So for example, mining and oil stocks. And then blue chip companies on the flip side are considered low risk investments. There's a reason why big fund managers are keen to invest in blue chip companies. And this is because as much as maybe the growth is a little bit more muted, they might be growing 3-5% every year, but they are well established. So you kind of have a sense of comfort and confidence in the company's staying power and ability to perform. So some buying rules that our brokers had given a tip, right? So aside from investing, so you've decided, I want to invest, I'm happy. Before you even go out on listing date, you should have a sense of, where will I buy? Where will I cut? How much profit am I expecting to make coming from this investment? So one of the tips that they mentioned is, so understanding your risk tolerance. So for example, if I have X amount of portfolio to invest, a conservative strategy will be, at most, I'll invest maybe 1% in this particular trade or transaction. An aggressive strategy would be, I might be willing to put in 5% of my total portfolio. Basic of portfolio management is always, you want to diversify so that you never know what industries are going to be affected. I mean, the hotel and the tourism industry was doing very well pre-pandemic. Who would have thought that Corona would hit and that this would happen to all of us, right? The malls were very robust. And now look at how this sector of the property space is performing. So it's always good to diversify so that you can minimize or help de-risk across the investment portfolio. And you can take a look at that. What's my expected rate of return? And at what price am I willing to cut? Let's take a look at the case study that was provided by one of our brokers. So this is at some point in time when they were looking at the IMI stock and thinking, where should I buy and where should I take a profit? So when they were looking at this is coming from one of our brokers from a technical standpoint, they felt that the support level was 980. And based on the movement, they felt that at 9.49, which represents about the 3% paper loss, that's their comfort level. I'm okay only up to like a 3% loss. And then assuming that there's 9.8 support, what's my hope? Where do I want to sell? What do I think would be the fair price, or at what profits would I want to exit? So where will I take profit? So that could be 10.98, which is the resistance. So at 10.98 versus the current support levels, it gives you a sense, what's my expected return? So maybe about 12%. And where's my stop loss? It's about 3.16% down compared to the 980 where it is. So risk reward ratio, if I divide that return versus the stop loss, what I expect to lose, it's about 3.81. So this trade is expected to give you at least 3.8 times the amount you're willing to risk on this trading strategy. So it just gives you a good sense of like, am I risking too much versus based on my expectation versus how much the price might drop. So this is just a tool. This is not always a hard and fast rule, but it could potentially help you assess. Selling rules. You could also have a trail stop execution, which is a strategy to protect your gains by taking profits on a desired objective. So if you're comfortable, if you say, I just want to get like 5% and then, sell it and then reassess again, that could be a good strategy as well. So at least you have sort of like a fixed number and then you keep on reassessing thereafter. A strategy to protect your capital is also by cutting losses on a desired risk tolerance. So let's say, for example, my hard stop is I can't take more than a 10% dip. 10%, even if I'm happy with it, I want to sell. Take this with a grain of salt, however. Again, if I'm looking at it as I'm buying into the company because I'm going to give this to my children 5, 10, 15 years down the road, then perhaps I'm not as sensitive with the 5 to 10% movement in price. Okay, in terms of tranche selling, it's a strategy to sell 30 to 50% of your stock position. I'm going to skip these slides. So just key takeaways for our audience. First and foremost, always make an informed decision. Please do not go with hype. This is your money that you're investing and will potentially lose. So it's important that you understand what you're getting into. When taking a look at an investment, it's always important to assess the story plus the numbers. So do read into the prospectus as well as the official disclosures on the PSE Edge. And price is not always equal to valuation. So you always have to balance this two out, how the markets are moving versus where we think the fundamentals are on the stock price. And with that, thank you so much for your time. And please do visit our booth, Unicapital, in the exhibit hall. Thank you and good morning.
Thank you so much, Pam, for that wonderful presentation. Really a lot to be digesting here. I think you managed to teach an entire course on valuation in 30 minutes. So medyo mahirap ata yan. But in any case, congratulations for having taken on